welcome, Joachim Müller.
Thank you for the warm welcome.
No, it's a pleasure. You're leading this company, you have been leading for 2 years, roughly speaking, 2 years with a quasi-perfect storm in the COVID system, of course. So this is one of your first trips out of Germany.
More or less, yes. So since I took over, we were more or less in lockdown, and I started to run the company out of the home office. So actually, this is my first large event since I took over, and I'm really happy to be here and talk here to you.
Very happy to hear you.
Thanks a lot. And also, thank you to Oliver Wild for the invitation, and indeed to you all, having the opportunity to speak to you today. When I was invited to speak to you distinguished guests at this gathering, I made careful note of the title of this event. And the title is really an interesting one because it's hard to translate into English, like risk, that's an easy one, but then it's, I don't know how to pronounce it exactly, like élan. It's something what in English is also translated into Elan, and in German also into Elan. So it looks like that Elan is really a genuine French characteristic, and Elan, or agility according to the business jargon on Vogue, is really what we need to respond to the new risk landscape. And how we, the collective community of risk managers, insurers, and brokers, can respond to this new landscape is what I would like to you today. I have heard earlier from the distinguished guests, we have heard from the distinguished guests about the big picture. But I now would like to approach our joint challenges from my perspective as an industry practitioner, a player in the market, and at eye level, with colleagues here who work in this industry day in and day out. Because there is no doubt, the big world out there is ever more challenging, and at the same time, our world, and indeed the special segment of corporate insurance and risk transfer, is mirroring these challenges. So I would like to look at both sides today, how we as an industry and risk management community navigate the current risk environment, but also how we as Allianz Global Corporate and Specialty manage our own business and relationship against the backdrop of the wider risk landscape. After all, we share common interests. Also, sometimes some of you can be forgiven for questioning that. And if we share interests so closely, why is it sometimes so hard to find the right solutions? But the reality is that we all want the same outcome. At Allianz, we talk about securing your future. Here at AMRAE, you refer to risk management as a virtuous process that protects the company, its employees and partners, including insurers, collectively making organizations more resilient, enabling progress and innovation is in our mutual interest. And this has never been more important. I hardly need to tell you how increasing uncertainty and volatility are the norm now, as previous speakers and panelists have highlighted. The up and down of COVID-19 waves, climate change, extreme weather events, the surge in ransomware, increasing social unrest and protests, major disruption in supply chains, and inflation. These trends are all prominent business examples according to this year's Allianz Risk Barometer, to which many of you also contributed. It's a new world, it's a changing world, and this new situation requires a new response, not just from insurers, but from the business as a whole. And naturally, the risk management industry should be at the forefront of this. It's not an easy journey, because it requires transformation, not just in what we do on our own, but also how we work together. Because partnership, collaboration, and joint efforts are, for me, at the center of this. Wait, I can imagine many of you are raising an eyebrow. What is this about partnership? We have just come through not one, but maybe 2 tough renewal seasons. I want to explain this by starting in my own backyard at Allianz Global Corporate and Specialty. Let me explain the journey we have gone through in the past few years, because it illustrates what can easily happen and did happen to others in our industry and the consequences for all concerned. And the hard decisions that have to be made, decisions which are rarely popular, but which, like medicine, are absolutely needed because they create the foundation on which healthy, sustainable relationships can be based. Let's turn back the clock to 2020, if you can bear it. By the end of 2020, we had a combined ratio of 106 in the 5 preceding years. This means we had been losing €6 per every 100 euro premium written, and in 2020 we wrote almost 9 billion gross. I don't want to do the math again, believe me, but the point is that both attritional and large losses had been steadily rising, and these adverse loss trends, together with a decade of soft pricing, had eroded our reserves and our capital base. Losses accumulated, and where our portfolio was overexposed, such as in auto recall, for example, we paid the price accordingly. The end result, as an unsustainable position culminating in a massive reserve strengthening from our shareholder. We had to take a hard look at ourselves. This could not continue. There was no alternative to a fundamental repositioning of our portfolio and indeed a transformation of our business. As a result, we have been investing heavily in pricing, modeling, portfolio management capabilities, predictive analytics, to get a more granular view of our portfolio and define clear target segments and sectors where we can really make a difference for our clients. As a consequence, I also want to mention we abandoned business volume of more than 700 million in the last 2 years. Here, I mean rebalancing of segments and regions, and also took corrective underwriting actions on individual accounts. This turnaround of our portfolio was certainly a stress test for many client relationships and led to unwelcome surprises and many difficult conversations. Why did we all do this? Like any other business, we need to operate on a profitable basis to be sustainable and a predictable partner for the companies and brokers for the long term. This is the foundation, what we need to absorb volatility from large loss events in a measured and in a reliable way. You should be able to pass your volatility to us and not see this reflected in wild swings of appetite or pricing from year to year, what I call negative surprises. This is very important for us. In fact, it's our key ambition as AGCS going forward to avoid these negative surprises. Now, our book is rebalanced, and this major remediation phase is past. We now have clarity what risk we want to underwrite, for what terms and conditions and appetite, and we are also ready to target new growth opportunities. But I would also like to mention underwriting excellence alone is not enough. We also have to continuously reduce complexity and costs and offer attractive solutions in the long term and invest in better services and added values for our customers. Take multinational programs, for example. Here we see real potential to support businesses in navigating their portfolios with better solutions, and we are currently focusing a lot of efforts on this, and also with input from clients here in this room. This wider transformation of AGCS is a journey which takes time, but our foundations are complete to make us a much more predictable and reliable carrier for the long term. This is the basis for a sustainable long-term partnership based on mutual understanding. Enough now on AGCS and our segment. I use this to illustrate the challenges for one company, including the self-reflection we had to do, and hopefully to build the understanding of the necessity for change. Let's now widen our scope and look at the overall risk environment. And I want to use climate change as a leading example of how our industry has to transform to meet the challenge. And this transformation can only come through in a new spirit of partnership. 2021 was another sad record year. It was the Earth's 6th hottest year on record, and we also saw record levels of natural disasters, weather losses, which were increasingly stemming from so-called secondary perils like deep freezes, droughts, wildfires, storm, and heavy rain. We all have maybe the pictures of the floods in Germany and Benelux this summer before our eyes. Cars and houses were washed away by heavy rain, massive landslides so intense that parts of the historic villages and even the castle of Erftstadt near Cologne were carried away. More than 220 people died in Germany and Belgium. The affected regions may not have seen rainfall of this magnitude in the last 1,000 years. Our friends at Aon tell us that 2021 is likely to be the 4th time in 5 years that no global natural catastrophes have cost more than 100 billion in insured losses. And according to the French Insurance Federation, last year's floods in June here in France triggered claims of 550 million. Sadly, these are the new normal headlines. We all know that this increasing trend is driven by climate change, more humidity in a warmer atmosphere. A warming climate may cause stronger cyclones, more intense rainfall and flooding, more intense convective storms, longer and more severe bushfire seasons. Further, we can expect to see events occur in areas where they have previously not been experienced or out of the normal season. Cyclone and hail zones are expected to move poleward. Bushfires will occur in regions not previously vulnerable for fire, and many regions will see way more rain and storms. It's exactly this physical loss impact of weather events that the risk management community is most concerned about. This is the key finding of the recent AMRAE survey and also confirmed by the Allianz Risk Barometer. The key question is now, how can we avoid an increasing protection gap and maintain risk transfer despite the rising risks of natural catastrophe and weather events? And how can we combat climate change to limit global warming and prevent worst-case scenarios for our planet? Again, this is about partnership, mutual understanding, and joint efforts. We have to work together to better understand the increasing and changing exposures and become more resilient, operationally and financially. The rising likelihood of secondary perils is causing us to further upgrade our modeling and technical approach exactly to these risks. So-called unmodeled risks are rather like a best bet approach for which we better go across the street to the casino barrier, which I don't think is acceptable for a technical underwriting business. We need to invest into technology and data to replace the common rear mirror claims analysis with the forward-looking approach to get ahead of the loss trends and to steer our portfolio in a sustainable way, and we have to share the insights with our clients. Indeed, more transparency on both sides is essential. We often say that better data is needed from clients to help us model and underwrite risks, not just about their own risks, but also about the risk of their critical suppliers. Easier said than done, because this needs strong connections to internal and external stakeholders, for example, for contingent business interruption. But I also believe that underwriting should not be a black box. We need to explain our position and the rationale of our decision-making and do that in advance to build mutual understanding. In business, as in all relationships, silence is not golden. Dialogue is essential because all parties must do their part. It's, after all, the nature of a partnership. Once we have understood our exposures, effective risk mitigation is key. The old saying, prevention is better than cure, remains as true as ever. But you all know that risk management is about prevention and cure. Risk mitigation upfront and robust protection after an incident. What's more, companies should demonstrate their risk management strategy as a core part of their corporate DNA, from top management to employees, and culturally as well as tactically. We insurers must help our customers defining minimum requirements and sharing best practice to become weatherproof, both in regards of physical damage and business continuity. This will be about continuously upgrading physical site protection, establishing monitoring and early warning mechanisms, and bringing business continuity management and crisis planning really to the next level, including regular testing. As an insurer, we want to support and reward our clients for effective risk mitigation. So we look for a strong culture of learning and improvement. I think many of you will agree that the strongest partnerships with insurers often arise from the risk consulting side, where real benefits can be created from an open exchange early in the underwriting process. Effective risk mitigation measures will enable sustainable risk transfer. We at AGCS are committed to provide coverage for natural disasters, as this is at the heart of the value proposition of an insurance company. However, as I had explained, it needs to be a fair deal for both sides, based on comprehensive understanding of exposures and risk mitigation, prevention, and cure. Capacity is nonetheless restricted, and it's likely to remain so for the more technical and highly rated insurers. This means companies should also be ready to move more skin in the game through higher self-retention or also through captives. Insurers deliver the most value for the big hits and not for attritional losses. It also requires a new approach to program design. So, for example, smaller primary layers with additional excess layer to build the depth of coverage. Given the sheer scale of climate change risk transfer solutions beyond traditional insurance may also be needed. This can mean placing catastrophe and weather risk via alternative risk transfer and capital markets, or even establishing private-public partnerships or governmental backstops. Last but not least, to address climate change. our partnership has to go beyond risk transfer. We all need to work together to limit global warming to 1.5 degrees Celsius and prevent the worst-case scenarios for our planet and indeed for our children and grandchildren. Many companies in this room are developing low-carbon strategies for their business, striving for climate neutrality and operations and products, exploring new green technologies, and making substantial sustainability commitments. This is undoubtedly an ambitious transformation for carbon-intense industries. As investors and coverage providers, insurance companies are also an important player to drive the transformation to the low-carbon world. And Allianz aims to take a leading role in this journey. One key action is our commitment to exit coal-based business models. We have started restricting coal in 2015, aimed to make significant progress until 2030, and target no coal in our investment and insurance portfolios till 2040. This is not an easy process and requires tough decisions on both ends. But we are supporting all clients who are committed to the low-carbon transition and have a clear plan going forward, and also provide more capacity and solutions to the green energy sector, including new technologies such as hydrogen. We strongly believe that a net zero future is possible. A continuous dialogue, clear communication on thresholds and timelines, a recognition of the progress, and gradually step-by-step transition in partnership will lead us the way. Again, openness and mutual understanding are essential. It's all about partnership and collaboration in the big and in the small, in each single annual renewal and in the long-term sustainability journey. As a global society, together we have to tackle the enormous challenge of creating a net zero future for our planet and for the coming generations. As in our industry, we also need a fundamental change from the price-driven, transaction-based, old-school approach to a really new partnership. A new partnership which is based on strong technical insight in risk management and underwriting, underpinned by dialogue and by transparency. A partnership that indeed delivers value for both parties as well as resilience for the future. Let's start 2022 exactly in this spirit. Thank you.
Merci beaucoup, Joachim Müller. Une ou deux petites questions juste pour essayer de compléter ou
Now I need
translation. Oh, I can put it in English.
Because otherwise I give you funny answers.
Okay, so thank you very much for the speech. As I said in the beginning when I presented you, you have been leading this company, this part of the company of Allianz company for 2 years. 2 years of a strong reorganization. You explained that, and a new policy and a new way of doing the business. Could you say today that this is finished, the model is designed, is redesigned, and you can apply what you are appealing for? I mean, mutual understanding, dialogue is essential, we have to work together, silence is not golden. All your quotations are there. Are you in a position to do that fairly and frankly?
We have laid the foundation. There's still work to do, but you know, we as Allianz, we are not an opportunistic player in the market. We are there to stay, and we want to partner with our clients not only for 2 to 3 years, I think we have to partner for decades. We have enormous challenges. We have discussed it today. And the challenges of the future we can only manage and tackle when clients, insurance companies are finding a deal, a new way of partnership to drive it together. So therefore, we are ready to move forward.
Would you say that we are now in new times where, or when all risk could not be covered, and it's a due for states, countries to cover a few risks, the biggest one, the unbelievable ones, and the company what they want to choose and to cover? Is it the new split between the incredible risk and what is your big risk and your the usual business?
You know, I think insurance companies are not able to cover systematic risks. We have seen it with the pandemics. With the pandemic, these are risks. Maybe also the large cyber events. These are risks where we need kind of a solution also together. I mentioned governmental backstops or something, where also the governments have to step in. But for the normal transition, and it's already a challenging transition, I think we have to partner in more openness with our clients to drive it together. You know, I think capacity also in the long term will be restricted, and so we have to find new ways in finding better solutions also together with our clients. But I think that the transparency piece and the partnership piece is really, really key if we want to manage it together.
Thank you very much, Joachim Müller. Thank you very much for this speech and explanations. Merci beaucoup. Nous allons nous interrompre pendant, disons, une bonne dizaine de minutes. Vous avez le temps de vous dégourdir un peu les jambes. Revenez ici, il y a une surprise dans, encore une fois, 10 à 15 minutes. Une surprise pour vous motiver pour reprendre nos travaux. À tout de suite et encore merci à Joachim Müller.